Now, oil. Now, there's some interesting news concerning oil, friends. Oil is apparently increasing. Have you all heard the news? It says here, Saudi Arabia launches bond deal as oil spikes above $50 a barrel. Now, this is the latest chatter of Russia and Saudi output freezes. I want to read what Zero Hedge has to say about this. It says, oil prices are rebounding from their Friday drop. As first the Saudis, then Russia dropped more hints at the potential for maybe, possibly, considering an output freeze. Now, this is major. Folks, this is major breaking news because OPEC, Saudi Arabia, has not capped any of their barrels. They've been putting out oil for the past 2 to 3 years in hopes of bankrupting our shale industry. Has it worked? I would say that they did a fine job on, many layoffs have taken place here in the U.S. A lot of our oil tankers capping. We're overflowing with oil. So much so that oil crashed. I mean, there were talks that oil would crash to $15 a barrel. So that's how bad it got. And the reason why is because OPEC, Saudi Arabia, refused to put a cap on things. They said, no, we're going to continue producing this thing. And you have many saying, come on, you guys are wasting billions of dollars, not a day, but an hour. Come on. That's a lot of money. And Saudi said, no, we're going to do it because they had an agenda. Well, their agenda may have just about ran out because they were losing a ton of money. They were losing so much money that we reported a few months ago that Saudi Arabia was starting to now stockpile some of their own cash because they said that there will be an end to oil before we know it. Things have apparently changed. Again, I like the way Zero Hedge put it in their article. I want to read a little bit more here. Bloomberg also reported Russia, the world's largest energy exporter, is willing to consider freezing or even cutting oil output in cooperation with OPEC, said President Vladimir Putin. Speaking at the World Energy Congress in Istanbul on Monday, Putin said he hoped OPEC would agree on limits to its crude production in November and that Russia was ready to support that decision. Russia will continue to be a reliable energy supplier. Now, ministers from some of the largest oil-producing nations are gathering in Turkey this week to discuss ways to end a 2-year supply glut. Again, this has been going on for at least 2 years. This is because of OPEC not wanting to lower their production. They were still producing barrels of oil as if it was still $100 a barrel. Crashing the system. Again, they saw that crashing the oil would benefit them more, or probably, I don't want to say benefit them more, but it was a small price to pay at the time than having the shale industries explode here in the U.S. Not literally speaking, of course, but figuratively speaking when it comes to us being more independent on our oil. They didn't like the idea. They said there's no way. We're going to continue to, we will produce. We're not going to hold back because if we do, shale is going to be the source, the dominant source in the U.S., and we don't want them to be dependent on that because then we'll go bankrupt. So they knew they were going to lose either way. They're going to either lose billions of dollars by continuing to produce at the level that they were doing for the past 2 years, or they were going to let us have our own independence and lose a ton there. So they were kind of in a hard place there. But let's continue. So now we have Russia being the deciding factor. I don't know if that would be the word to use. I don't know if they would be the deciding factor, but they would definitely, they have leverage to where they're saying, listen, it's getting out of hand. OPEC, come on, I'll tell you what, I'll be the first one to go, okay? I'll limit. Let's talk about limiting. And I'll tell you what, my friends, Saudi Arabia, I believe they're sweating it. It may be hard to believe because they're quadrillionaires, right? Is a quadrillionaire even exist? If they did, Saudi Arabia would be under that definition because they have a ton of money because of them being oil. But I think they were starting to sweat it because when you're talking about losing billions of dollars an hour, I may be very generous in that. It may be in minutes. They were losing billions every minute probably that they needed help here, and so here's Russia to the rescue, right? Again, come on, Russia's been coming to the rescue quite a few times here than the past couple of years. But let's continue. It says here, speaking at the World, okay, we already read that. It says here, ministers from some of the largest some of the largest oil-producing nations are gathering in Turkey this week to discuss ways to end a 2-year supply glut. With benchmark Brent crude trading at about $52 a barrel, less than half its price in mid-2014, countries from Saudi Arabia to Russia remain under severe economic pressure. Last month in Algiers, the Organization of Petroleum Exporting, which is OPEC, reversed its policy of pumping without constraints, helping boost prices. It is not unthinkable that we could see $60 by year end, following the agreement in the Algerian capital. This is according to Saudi Arabia's Minister of Energy and Industry, Khalid Al-Falih. Even so, a lot of work needs to be done by the next OPEC meeting on November 30th, with crucial details still to be resolved on how the burden of cuts will be shared, or whether producers outside the group, including, will cooperate. Russia would prefer to freeze its output at current record levels, rather than make cuts. Energy Minister Alexander Novak had mentioned this earlier today. He said Russia has pumped 11.2 million barrels a day of oil so far in October. Now, this is beating last month's post-Soviet record of 11.1 million. This is according to preliminary data from the Energy Minister's CDU Tech unit. And the resultant short squeeze, jawboning driven shenanigans. The spike takes place just as Bloomberg reports that the Saudis are launching a bond deal on October 12th, noting that Saudi Arabia mandates Citi, HSBC, talking about the banksters, JP Morgan as joint global coordinators to organize a series of fixed income investor meetings. Bank of China, BNP, Deutsche Bank, Goldman Sachs, Morgan Stanley, and more is also helping the process. Subject to market conditions, a debut rule of 144A senior unsecured USD benchmark offering across 5, 10, and 30-year maturities under the kingdoms. Listen, we've been talking about kingdom rising against kingdom. That's Bible prophecy, Matthew chapter 24. Incidentally, both the latest jawboning hire and the oil deal roadshow followed just days after the S&P affirmed the Saudi A2 ratings. Bottom line, the oil spike will continue, at least until the Saudi deal is successfully priced. And as even Reuters correctly notes, that both OPEC and Russia have clearly realized that talk alone can push crude prices higher by as much as $6 to $7 a barrel. That's a ton of money, folks. That's a ton of money. When we're talking about barrels, when we're talking about crude oil and the amounts that we've been seeing them nosedive to, $6 to $7 is pretty good. And again, it's just talking about it. They have not even made any deals yet. They have not given their word over anything yet. This is amazing stuff. So in other words, California, we're going to be dishing out more at the gas pump. Look, I've asked a question. I live in California, and I've asked a question. With the prices of oil plummeting to the bottom, the way that they did within the past year, why didn't we see it at the pump? Why are we still paying $3.50 a gallon? We should have been paying 75 cents a gallon. I'm being real here. This is the truth. Anyone paying over $1 in the United States of America was getting ripped off. And they're still going to get paid. Signs of the times. Let's continue. Now, there is a coming... Now I got to say this. Because for many, they're saying this is a sign that, things are going to be good in the economy again, Nobody wants to see higher oil. But nobody wants to see it crashing either. Because when you get crashing, you get, if you see the oil going low, you're talking about society crashing. We don't want that. So it's always a good thing to see it increase. So, and in this case, it would be good. However, we have news from Bank of America. Before you get all excited, start running up your credit card bills again. Bank of America has a recession warning. This came out today. Has a recession warning that's downright, and I quote, scary. Now, this is what they said. I'm not fear-mongering. Don't send me any emails. Downright scary. It says here, there's a chilling trend in the market, and it could wreak havoc on your portfolio, a top market watcher said. We are 7 years into a full-fledged, all-out central bankers doing everything they can to stimulate demand. Bank of America and Merrill Lynch's head of U.S. equity and quantitative strategy, Savita, recently warned on CNBC's Fast Money. He said, and I quote, now listen, before I go any further, I know we probably have some people saying, okay, portfolio, schmortfolio, who cares? I don't have portfolio. I don't have 401k. I don't even have a savings account. I barely got $2 in my wallet. This has nothing to do with me. And I say it has everything to do with you if you are employed. And you may say, well, I'm not employed. I'm getting government assistance. And I will say it still has everything to do with you if you're getting government assistance. Listen, everything is connected. It's all interlinked. It's all connected. It's all a domino effect, you know? So even if you think just because you don't have a portfolio, you don't have any stocks or bonds, gold, silver, anything, it doesn't matter to you. No, it has to matter to you. The fact that you, the fact that you buy things, it matters because it's all interconnected. You may, whether it's via government assistance or if you have a full-time job, part-time job, or no job. Listen up. Very important stuff. It says here, we looked at all these indicators that have been pretty good. And I say the reason why it's important is because a lot of this will be dependent on whether you get, if you rely on the government, whether you would get your Social Security check, whether whether you're going to get the raise at work or downsize, for crying out loud. So that's why I say listen up. It says Bank of America, again, has a recession warning that's downright scary. So they are quoted as stating the following. We looked at all of these indicators that have been pretty good at forecasting recessions, and we extrapolated that if they follow the current trends they're on, we're going to hit a recession sometime in the second half of next year. The most unsettling thing is that this recession risk isn't discounted into the market at these levels. And it goes on talking about the S&P, and I'll skip that part. It says here, what scares me, this is according to the market analyst. He says, what scares me is a market being so fragile. So remember what happened in January. We got a whiff of bad news, and all of a sudden the market is at 1,800. A move that argued poorly for the near term. I think that speaks to the reaction function of the market. There are a lot of itchy trigger fingers. There's a lot of violent trades that can really roil a fairly complacent environment. The markets are unstable, my friends. Bank of America continues to warn about recession. You have now rumors that if Donald Trump gets to be president, that the stock market will collapse. It's getting interesting. It's getting interesting. What's important is that in the midst of all this, all these signs of the times, that we remember that Jesus Christ is Lord. Amen? That He has told us about the times in which we're living in. He has told us about the shaking in our economy. You may say, well, where's that at? Well, go with me very quickly. Very quickly, I always say, because there's so much to cover here in so little time. Go with me very quickly to the book of Hebrews. Hebrews chapter 12, verse 26. I'll go in verse 25. See that you do not refuse him who speaks. For if they did not escape, who refused him who spoke on earth, much more shall we not escape if we turn away from him who speaks from heaven, whose voice then shook the earth. But now he has promised, saying, yet once more I shake not only earth, but also heaven. Now this yet once more indicates the removal of those things that are being shaken. The economy is being shaken. The world global markets continue to be shaken. Bank of America has a recession warning that they claim will be shaking many. It says these are the things that are being shaken, and the things that are made, that the things which cannot be shaken may remain. The things that cannot be shaken is your faith. We talk about the headlines to let all who have ears to hear what the Spirit of the Lord is saying know that we're living in the last days. Know that we're living in the end times. To know that God is the one that's causing the shaking. But He's doing it so that anything that doesn't need to be got to go. And the only thing that should remain is your faith. Amen? Well, that's what it says. It indicates the removal of those things that are being shaken, as of things that are made, that the things which cannot be shaken may remain.